Hey everyone, wanted to jump on here and discuss some of the investment trends that we've seen going on in the markets for this week, the week of October 9th, 2023. So first and foremost, the stock market has been hit pretty hard over the past couple of weeks by high bond yields. So investors are watching the long-term bond yields closely over the next couple of weeks, and they're looking to see what rates will do. Higher long-term yields on Treasury have been leading to the stock market taking a hit. So a lot of investors have been fleeing stocks over the past few weeks and putting that money into Treasuries where they can get the sure thing or the guaranteed return. So this is referred to as the risk premium. So what type of premium are you getting by investing in equities? And how does that compare to what you'll get from Treasury bills? And right now, that is at a 20-year low, meaning the gap between the risk you can take for the return from stocks compared to what you can get from your return on bonds. So what that has led to is a bit of a sell-off in the market over the past couple of weeks. However, this week, the long-term Treasury yield rate did drop a little bit and led to a couple of days of rallies in the stock market. So a lot of things that went on this week pointed to the bank earnings that came out on Friday. So for the bank earnings that came out, it was JP Morgan, Citigroup, and Wells Fargo. JP Morgan was the first bank to report Friday morning, and they topped both their profit and revenue expectations. So this was largely due to the higher interest rates than they had expected that they are getting on their deposits. Their revenue grew from this time last year by 21%, and their profits surged as high as 35% from this time a year ago. Jamie Dimon stated that consumers could be starting to get hit, meaning that with the higher gas prices, higher food prices, student loan repayments being due, this could have a negative impact on consumers as they're starting to see consumers' savings levels decrease. Same was the course for Citigroup and Wells Fargo. They both beat their profit and revenue expectations. As of Friday morning, those stocks opened higher on the trading day. The last thing to discuss with you is we did get a new memo out from Howard Marks. So Howard Marks is a renowned investor. He is mainly investing in fixed income assets. He's a billionaire investor at Oaktree Investments. So one of the things that Howard Marks mentioned in his memo, which is titled Further Thoughts on Sea Change, he is describing a sea change as a dramatic shift in the investing world, putting us into a different investment cycle. So he doubled down on his sentiment that what we are seeing now and what will be going forward in the market is different from what we've seen from 2008 all the way up until 2021. So in 2008 and 2021, we saw the Federal Reserve take drastic measures, drop interest rates down to about 0%. So we were in a declining interest rate environment. So what that meant for assets, what it also meant for companies, is that if you could borrow at next to nothing, it really spurred a lot of economic growth and it led to higher asset prices. However, what we are seeing now, we are in a higher interest rate environment and what could be a higher interest rate for longer, what they're kind of referring to as this 5% interest rate environment. What that will do is that will start to have an effect on the growth of the economy. So for an example, if you took out a loan, say you took out a commercial loan for $50 million and that loan was at 5% in years past. You now go to refinance that loan and you're getting that same $50 million that you're borrowing, and now your rate is at 8%. So automatically, as you can see there, there's a difference of 3% that investors are not getting a return on their money for that difference in the yields. So one of the things that Marks suggests is starting to make a pretty significant allocation into credit funds, into fixed income, and turning away from equities at this time. So for those of you that are interested in that, make sure you check out that memo. I posted it on my LinkedIn page. So there's your recap for the week. As we mentioned, all eyes are pretty much focused on interest rates, on these treasury rates that have been coming out. So if you have any comments, feel free, leave a comment below, share this video. Would love to hear your thoughts on what you're seeing in the investment world.